Hello and welcome back. I'm Natalie MacDonald and you're watching Sydney Direct on Dukascopy TV. Gold has rallied to multiple week highs off the back of that US Federal Reserve decision to remain on hold with their interest rates. With that in mind, I'm down today in a gold vault to catch up with Chief Economist of ABC Bullion, Jordan Eliseo. Jordan, welcome to Dukascopy TV. Many thanks for taking the time to chat with us.
My pleasure. Thank you for having me on.
Not a problem at all. Now we're going to be talking about the US Federal Reserve and also its impact on gold. Firstly, though, were you a team hike or a team hold?
I was definitely in the team hold camp. So I think if you look at sort of what's been happening in the US over the last few months, yes, unemployment data has improved noticeably, but there's still a complete lack of wage growth, retail spending, industrial production. A lot of other figures are quite weak. And of course, there's still no real official inflationary pressure. So the idea that the Fed was going to need to hike was always a little suspicious in my mind. So I'm not at all surprised that they decided to hold fire for now.
Now, we saw both a more dovish and also a more data-focused Fed now. With that in mind, is October going to be too soon, or should investors be looking ahead to perhaps even early 2016, as a few of the FOMC members suggested?
Yeah, look, in my opinion, I think it will be 2016 now, if ever. As you said, they've very much refocused on the data. Of course, you never want to say never, and I think Yellen and the Fed are desperate to get at least one hike away, just because they've spoken about it for so long. And even if you look at the market reaction to what happened last week, there's a real lack of confidence now, because the Fed has effectively said, look, we're really not too certain what's going on here. So if I was a betting man, I'd say it's likely to be early 2016 at the earliest, but we'll have to wait and see.
Okay, now moving on to gold. We are in a gold vault today. It's very beautiful. We saw gold rally really off the back of this hold decision. How's the precious metal been tracking since then?
Yeah, so gold was last trading around the US 1140 an ounce mark, so it did like the news that came out of the FOMC. Not so much the lack of hike, which was, I think, largely expected by the time the news came out, but that real dovish tone that came out from the Fed. So especially if, we look to the dot plot, there's now even one FOMC member talking about the potential need for negative interest rates in the US. Now, that's, of course, not a base case scenario yet, but obviously it goes to show how sort of nervous the Fed is and how dovish they are becoming. So not surprising to see gold like the news. Also important to remember that sentiment towards precious metals by the middle of the year had really reached all-time lows. So a bit of a bounce from where we've been was not unexpected.
Now, staying locally just for a moment, how is that falling Aussie dollar really shaping sort of local gold bug investments and for the gold?
Yeah, well, look, it's one of the interesting things is, we're so obsessed by the Fed and the US dollar price of gold, even here in Australia. That's what we see on the news at night and on our, on our tickers and so forth. But it's obviously the local currency impact that affects investors here. And Aussie dollar gold is now up about 10% year to date. You compare that to the local stock market, which is down nearly 10% year to date. So anyone that's been investing in precious metals has actually done, on a relative basis in particular, quite well this year. In fact, if you look at gold in really all currencies other than the US dollar, it does look like it actually kind of bottomed around mid to late 2014 and has started to strengthen again. So, I suspect that the Reserve Bank of Australia will have at least 2 interest rate cuts in it between now and probably the middle of 2016. More downward pressure on the Aussie dollar, more reasons to have gold in the portfolio.
Now, in terms of that, let's look at physical demand, because that is sort of a more unique approach that Australian investors do take to gold. They are very much more concerned with the physical aspects. How are you seeing sort of that trending at the moment?
Yeah, well, one of the really interesting things down here is the demand that we're seeing from self-managed super funds. So obviously, self-managed super funds are, for the US, I guess the equivalent of a self-directed IRA, and physical gold is one of the assets that they can put in their portfolio. Now, what we've seen at ABC Bullion here, we have a very large number of SMSF clients across our database of clients. And our turnover to that particular subset of clients has quadrupled since the start of the year. So with the Aussie dollar falling, with interest rates coming off another 50 basis points, and with much more volatility on the ASX, you're finding those more wealth-conscious investors increasingly allocating money to precious metals. So that's been a really noticeable change in trend since the start of the year. So whilst the gold price itself, particularly in US dollars, hasn't been doing much this year, physical demand is actually very strong, particularly amongst that type of client.
So if we are, as you're forecasting, pitching ahead to early 2016 for that eventual US Fed rate hike, how do you see investors continuing to position themselves then?
Well, I think investors are quite nervous now as a result of what we saw last week. And if there's one thing the market hates, it's uncertainty. And we're seeing that again this morning. The ASX has sold off quite aggressively. So I think people are going to be quite neutral in their positioning. As it relates towards gold in particular, one of the things that many investors aren't aware of is that 3 of the best periods of gold price appreciation have actually occurred in environments where the Fed has been hiking rates. So this idea that one interest rate hike is going to kill the gold market is pretty short-sighted and nonsensical. So I think that we're going to continue to see increased gold demand, and eventually that'll translate to higher prices.
Jordan, thank you so much for your comments today. Much appreciated.
My pleasure, anytime.
Our many thanks to Jordan at ABC Bullion for his time. I'll be back with plenty more exclusive interviews for you right here from the heart of the APAC region. For now, though, it's goodbye.